Good morning, Steve Reed in Chicago with the morning grain comments. Well, it feels like a Friday today with the grain room closed tomorrow for holiday. We're adding a little premium back in the grain markets today on low volume. I think in the soybean market, we're still looking at the possibility of increased U.S. exports, probably July forward, as Brazil will be out of the marketplace. We're also watching soybean oil making new highs. Part of that has to do with concern that the less Black Sea vegetable oil exports could increase demand for U.S. soybean oil. We also note that there is talk about more biofuel demand here in the United States. And finally, there's talk about a drop in delivery receipts in soybean oil that may have sparked yesterday's rally. As far as the corn market is concerned, again, nearby corn and new crop all making new highs. Nearby corn because of what's going on in Ukraine, the lack of exports, and also new crop because of rains in the east that could delay plantings. And we already have the USDA numbers talking about lower than expected acres. And as far as the wheat market is concerned, we're adding premium because of the dry U.S. Southern Plains weather. We're also watching global export matrices. Yesterday, Egypt paid a record high price for French wheat, and it suggested that wheat out of the Black Sea, out of the Baltic, may not be available because of an increased risk. And so it sounded like Egypt was going to be looking at India wheat, which is trading around $325 to $350 a ton, which is about $120, $130 a ton less than what they paid yesterday for French wheat. As far as the people that are smarter than me and have price models, they're looking at the fact that we are getting close to value. We probably priced in a lot of the news about shifting of the potential bean and corn export demand to the U.S., even though we haven't seen big increase in sales yet, that we may have already traded much of the USDA report with the lower corn acres, and that some people feel that in between showers we will get this corn crop planted before mid-May, and that could offer a little bit of resistance. In the wheat market, we're at a critical turning point. The European model does not have a lot of rain late next week for the Southern Plains. The American model is basically wet. We do not see a change in the weather pattern that would suggest long-term the Southern Plains will be warm and dry. So Sunday night, Monday's trade in wheat could 100% be due to whether this rain event is still on the maps or if it's been reduced. We would expect that crop ratings continue to remain low across the U.S. hard wet winter wheat areas. So we'll be watching inflation. We'll be watching global economic growth, especially in China where the lockdowns are. And we'll be watching some of the logistic strains here in the U.S. Because of either labor shortage or just overall lack of truckers and things like that. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.